Hey everybody, Alex here. I think we are going to be doing a very interesting update today. Everybody's going to find it extremely useful. You're going to be glad you're here. But before we get into that, guys, jump down below, hit the subscribe button, hit the bell notification. Doing both of those things, it will make certain you do not miss a single update, important update, over the coming days and weeks on the Qs, broad markets, everything in between, your favorite trading channel right here, Momentum Charting. Thank you for being here. Guys, let's get into the charts here quickly. As you'll know from the last update we did yesterday, I think towards the end of the day yesterday on the Qs, we were looking for a couple of things. I just want to quickly say that I'm probably like a lot of you guys in some respects. I love to watch a lot of the stuff on YouTube, and I have some websites also that I look at, but a lot of financial stuff, just because I love the stock market so much. I love to follow it every day. I love charting. I love trading. I love everything about it. So, you know, in my free and spare time, I do like to look at a lot of channels, a lot of stuff related to financial content. But at this point in my trading career, guys, I am looking at it, most of it, a very high percentage of it, as entertainment value more than instructive value, right? I have my own methods, my own methodology for trading that I found to be very useful. And I found in the past, when you're getting confused and looking at so many different opinions, you start getting a lot of different noise, so many differing opinions. There's always this segment of the market, of the people out there that are just completely bearish all the time. Permanent bears, always expecting markets to fail, expecting the United States to fail, expecting the stock market to crash. You get that segment, but then you got the technicians, the Elliott wave guys, who are always looking for the next big pullbacks, and you got that noise. Then you got half of those are bullish, half of those are bearish, and you've just got this huge mix of different people out there. So if you're listening to a lot of stuff for instructive purposes, it is easy to get confused and easy to get lost in all the noise of the markets and not really understand what's happening. And a lot of times, and what I explain from time to time, I'll jump on these different channels and I'll say, guys, it's not the fact so much that you are wrong about your analysis. That's not the problem. The problem is that, you know, by putting out this constantly bearish content, you are keeping people paralyzed in fear of actually putting their money into putting your money into work into markets that are just a fantastic money-making opportunity. And it is quite possible, guys, that we are getting towards the latter stages here of rallies in the markets. In the next, I don't know how long it's going to be. I don't have a crystal ball. Next few months, next year, whatever it is, where we've got an opportunity here to put our money to work and start making some returns. And there could be a period in the coming years where markets are flat, right, for an extended period of time, and returns in the market are much harder to come by. So again, I do jump onto these channels from time to time and complain mostly about the fact that, yeah, your analysis is wrong. It's been wrong. Your analysis has been horrible for the last 15 years. But the problem with that isn't so much that you're wrong. It's that you are keeping people in a state of constant paralyzed fear of putting their money to work in the market. So, yeah. So having said that, yeah, I watch a lot of these channels and I do it for entertainment purposes mostly. But this last week, I've been just hearing a more than usual, more than the average, on just so many different outlets about this massive correction in the markets that's coming. It's right around the corner. We're getting ready to crash 15%, 20%, 11%, 12%, and it's coming. It's right around the corner. So, guys, when I hear a lot of people and I hear so many different outlets parroting the exact same thing, I feel it's always a good idea to at least give a look to what's happening and potentially see what those same people are saying. Because, guys, obviously markets, you know, there wouldn't be a market without some people being on one side and some people being on the other. And I think it's always a good idea to try and take other people's opinions into account, and try to maybe form it in, fit it into your own analysis in some way. But I just, especially with the early dips we were getting at the early part of the week last week, I thought it was a good idea for us to just take a step back, look and see indeed if markets were in crash mode, which would be bad for everybody, right? Short-term traders, long-term traders. I thought we just kind of needed to step back and see and take a look and see if this correction, which ended up just being, we'll get more into that in a second, just a pathetic correction here of around 2.2%, something like that. But people were really, it's so many channels, so many people calling for a 15% correction. I just thought we had to step back, take a look at this, and see if indeed, just wait a couple days, which is never a bad idea, but just see, letting the smoke clear on this and seeing if indeed this correction looked like it's going to be longer. But guys, I can confidently say right now, I believe this correction is over. Or not even correction, just 2% down leg. I believe it's over, and I'm going to show you a couple of reasons why I believe it's over. First, as you guys know by watching yesterday's Q's video, I'd set this line in the sand on the 3-minute Q's chart. I said if this breaks to the upside, very likely. I think this correction, or whatever you want to call it, that everybody's been calling for, it's done, it's cooked, it's over. Our next leg to the upside is started. And guys, you can see here right around 6:39, 6:40 this morning, the Q's just blasted up through this upper trend line on the 3-minute chart that I set. So that was condition number 1 that I set. And as you guys know, the second condition I set was for our VIX, right, to not breach this trend line that I set on the 15-minute chart to the downside, and it did at right around 9 a.m. this morning. We got this pretty confident to say that this trend line has breached to the downside, and we are again on the next leg lower. As we wrap up this video, I'll kind of show you guys a little bit different look on this VIX chart and kind of show you where we are going to be looking for potentially the next spot of fear entering the markets. Okay, but I think our 2 main conditions have been met here. Q's blasting through this line of upper resistance that I set on yesterday's chart, and the this VIX, the trend line breaking. Watch yesterday's videos. You guys can see that's exactly what I was saying. I was putting out 2 conditions where I thought that would signify an end to this quote-unquote massive correction that everybody was seeing coming. But guys, before we get into the conclusion of this video, I just wanted to show you what I thought was, sometimes it's easy to get lost in all the minutia of the market, all the complicated technical analysis stuff, all the patterns, all the fear, all the noise, all of that. It's very easy to get lost in all of that. But I think we have a chart, guys, and the chart I want to bring everyone's attention to right now is the chart of AAPL, chart of Apple. And I want to do it on a 2-hour time frame. Okay? Let's open this up here on the 2-hour time frame. Apple. Okay. So, guys, what I want to point out to you on this chart, and that I think you're going to find very interesting and very instructive, is I've set my trend lines just so it's easier to see on the camera. Thicker than usual. I've made them extra thick so you guys can see what I'm trying to show everybody here as clearly as I possibly can. Okay. I've got these trend lines set on the 2-hour chart, and guys, I'm going to go back through every single major market correction in both the Qs and the SPY has been predicted in advance, okay, over the last, I don't even know how many years. I'm just going to go back over the last like 2 or 3 years and show this to you guys. But over the last 5, 6 previous years, every single start of a crash in the broad markets and in the Qs and in the SPY has been predicted in advance by a break to the downside of the Apple chart on a 2-hour time frame. Most of the time it's a diagonal trend line, and I think there were 1 or 2 cases where it was a horizontal trend line, but most of the time it's going to be the 2-hour diagonal trend line. You guys know I love to use these. I use them in all my charts, but every single major correction to the downside has been predicated by a break in Apple, okay? Not in the Qs, not in the SPY, not in IBM, not in Microsoft, not in AMD, not in Amazon, but in Apple, okay? Let me say that again. Every major downtrend in the last 5 years has been predicted in advance with a break to the downside of the chart in Apple, okay? On a 2-hour time frame. And guys, look what we have here. So Apple did indeed come down here on August 19th and tag. You can see this trend line could not be any more clear right now. You've got these beautiful touch points here. July 8th, July 19th, July 28th, and again here on August 19th. So you've got this beautiful 2-hour trend line. I've showed this to you guys in multiple of my other Apple videos. Yeah, you guys can go back and watch those if you're interested, this 2-hour trend line. I've had this set in place here for quite some time. But, guys, we are not broken below this trend line yet. Apple wicked off this strongly to the upside towards the end of the week last week on the 19th and followed through on the 20th and broken back to the upside. Okay? So I believe the path of Apple here now, guys, is getting set for a big breakout to the upside. And obviously that would mean markets as well, right? Going back to what I was saying a minute ago about every major crash in the market predicated of a breakdown in the chart of Apple. And we have not had a breakdown. In fact, it looks to me like we are pushing much higher. So guys, let's just continue down this path a little bit and go back into history a little bit so I can show you guys this more quickly. And I'm not going to show you guys the charts of the SPY and the Qs on all of these. You're just going to have to take my word for it. You can check on your own charts if you're interested, but and it's probably a good idea that you do it. Don't ever take what I say at face value. Always confirm with your own charts and your own eyeballs what I'm saying to be factual. So guys, back here on, let's see, we had a breakdown of the chart of Apple on a 2-hour time frame diagonal trend line here on April 30th, 2021, which ushered in a major period of weakness on the SPYs and the Qs. Okay? Again, here on this trend line, major trend line here on a 2-hour time frame, broke down, started getting the first signs of a breakdown in Apple, crossed this trend line in February 16th, 2021. We got a breach of the trend line here, 10:30 in the morning, a complete breakdown and push down candle at 12:30, and then on the 17th, continued in earnest with the breakdown of this chart of Apple around February 16th, February 17th, 2021. Go back, do your own due diligence, do your own research. But in that period of time, we started getting a massive multi-week or couple-week correction in the SPY and in the Qs as well. Here was another period of time. Diagonal trend line set here on Apple. Breakdown, October 19th, 2020. Which ushered in a period of a couple of weeks of very, very substantial weakness in the charts of the SPYs and in the Qs. Again, represented by a breakdown in the 2-hour trend of Apple. Then another major period of weakness here, a breakdown of this very obvious trend line here starting in July 2020. A breach, breakdown, and a continuation candle here around the 3rd of September 2020. Check your charts. Ushered in a period of major weakness in the SPYs over the coming weeks and the Qs as well. And let's see, where was the next point I wanted to show you guys here? Okay, yes, everyone's favorite. Oh no, we aren't quite there yet, but this one was interesting too. A lot of weakness here. Diagonal trend line set. Very nice trend line here in place. January 2020. Breakdown, confirmation right here. This here, guys, was the COVID crash, right? So yeah, this was definitely an important crash. But again, signifying, I mean, you guys probably, those of you who are fans of the markets probably know the real date of the start of the crash was February 24th. But the first signs of weakness could be seen here in Apple many days before. But even on the February 21st at 10 o'clock, 12:30 in the 10 in the morning. Let's see here. Yeah, 10:30 in the morning. You got the breach of this trend line and a follow through at the 12:30 candle on the 21st. Breakdown of this trend line in Apple, signifying the start of a next major bearish leg to the downside, the COVID crash of 2020, which was obviously what 3 weeks of basically hell for a lot of people here. Looking at it in retrospect, it was just a blip on the radar, but this was a period of time of major fear and worry, but again shown in advance with a simple break of this trend line, 2 hour of Apple, right? Started this major dip. And then the last one I did want to show you guys here. No, I think we have 2 more here to show, right? Yeah, 2 more here. Let's do 2 more. Breakdown of this trend line here starting in June 2019, and then in August, around August 2nd, we got the breakdown candle and the follow-through candle. Short period of correction, but this led to definitely some weakness over a week or so in the SPYs. But you can see that was shown in advance with a breakdown of the 2-hour trend in Apple. And then, yeah, actually, I wanted to show you that 2018 crash too, but here's even another one. I mean, guys, this is just like absolute clockwork. Every single one of these big corrections, big crashes in the market were seen in advance with a breakdown in the chart of Apple. There's just no way around this. This one, beautiful breakdown of this trend line here, right in the period of May 2019. Major point of weakness in the market. A correction to the degree of 20% in Apple. That's just in Apple. I don't know what the overall market's corrected. Probably the same amount, maybe a little bit more, maybe a little bit less. But another period of weakness in the markets predicated with a breakdown of the 2-hour chart at Apple. And I'm just going to skip to it right now. I don't want to go crazy, overwhelm you guys with too much stuff here. But this trend line in Apple, yes, this trend here definitely a little bit more complex, a little bit more complicated. You probably could have set your trend line a few different places here. This to me was the most relevant one. You had these areas of support here. You probably also could have come up here on Apple and done something like this, right? But it basically is leading to the exact same result, guys. A breakdown of Apple. You're saying either here around 30th of October 2018, or I prefer this diagonal trend line. A breakdown in these areas early November 2018. But both of those instances, both of those breakdowns in the trend on the 2-hour time frame of Apple, led to major, and this was obviously the November-December crash of 2018, which a lot of you will probably remember as well, led to significant sell-off in the market. Again, a blip on the radar, but at the time, guys, this is big downside movement in the markets. So, guys, I hope you enjoyed that instruction. Let's just jump back here to current day on the chart of Apple. What are we seeing here today, guys? Very obvious, very apparent trend line. We've got, we do have this longer term time frame trend in Apple, which we are going to want to be paying attention to at some degree. Probably that's going to come into play in the future. But for now, guys, the important trend line to me is what's happening now, which is how I did all those past trend lines. Look what's happening here in the chart of Apple, right? Are we seeing a breakdown of this 2-hour trend line, or are we seeing an absolutely beautiful upside continuation and soon to be a breakout past these all-time highs, past a breakout to the upside of this triangle, and most likely reaching again these areas we were talking about in the last Apple update, probably around $165 or so, perhaps sometime early mid-October. I don't know exactly how this is going to play out, but guys, let's put the bear hats away, dump all the bearish garbage out the window for now. Yes, still getting these videos. I'm sure you're still going to be getting the fear videos this weekend, probably well into next week, and beyond that, of course, with all the perma-bear stuff. But guys, I'm taking off my bearish cap, looking for the next rally in the market, in the Qs, in Apple. I think we're well past the stage about worrying about any major corrections happening in the market here. Yes, that 2% dip we had in the Qs was a little bit frightening for a couple days there. Especially, again, I was just hearing so much noise, so much chatter about this massive correction in markets that was coming. So I figured it was best for the channel just to step back for a minute and see if we could get some clear signs that the correction was over. And I believe we did get that, today with the VIX breaking down. And I showed you guys that 3-minute chart of the Qs. So, guys, let's put our bullish hats back on. Try to get this next upside to the rally to the upside, which is, I believe, is getting ready to start in the Qs. I think it could potentially be a very strong, very powerful rally to the upside. I'm definitely going to want to partake in it. I'm just going to show quickly to close out this important video. What are we going to be looking for on the VIX? Guys, you can see here I'm on a 2-hour time frame. We've got the 2-hour VIX now rolling down to the downside. I don't know exactly where this is going to take us, but again, I'm going to try to warn everybody on this channel. Again, guys, that's why you 100% you're going to want to subscribe to the channel if you have not yet. The technical analysis here, the information you find on this channel is 100% unlike anything else you will find online. I don't listen to the noise. I just do my analysis. I listen to my own charts. I do my own charting. 100% unique takes on the market. Only place to find that here at Momentum Charting. So make sure you're subscribed. But guys, where am I going to be looking for a next potential point of market weakness is going to be when I see this, the chart, the VIX here. I don't know. I think it's going to end up playing out similar to what happened here on August 4th, where we just get this continued breakdown on a 2-hour time frame. But at some point, guys, here we're going to get a rounded bottom on the VIX for a potential curl back to the upside, and that to me is going to be the point to watch for a next worry, next fear, next increased volatility in the market, next potential breakdown in the market. Going to be watching for the VIX to start the next leg to the upside. Going to be watching, obviously, chart of Qs, chart of Apple, to see if we can see a breakdown of the 2-hour trend line. So guys, subscribe to the channel. Thank you so much for being on this video. I think we've got some very clear lines in the sand, some very clear things we're going to be watching for the next potential points of weakness in the market. VIX, Qs, Apple chart, all that stuff. Do not miss the next update. Probably going to come. I may do a couple update videos on some of the stocks I haven't done in a while this weekend, but next broad market video definitely going to be coming out Monday. See you then, guys. Thank you so much for watching this video. I will see everybody again in the next update. Bye for now.